I give you a little countdown. All right, it says the hangout is live. So as of now, Lior, me and you are live. So it is 8:30 on the dot. So what I'll do is basically I always do is just give it a second or two. Once the first person decide to join us, then we can just start ranting and talking, man, because I'm interested to hear about a lot of things that you got going on and what's happening in your world. So, but other than that, how was your trip on this side of the water? Last time we talked, you were on the other side of the pond. How's everything going?
I've been in North America now from the 21st of Vancouver most of the time.
Yeah.
Seeing that with CEOs of mining companies, you probably know a few of the names, and so I've been doing like 4 lunches and 3 dinners every day, talking to plenty of companies to see what's going on, who's cashed up, whose debt levels are low, who's ready to pound it if we need to continue.
Yeah.
And then right now I'm in North America. I'm state-wise, and I was just in the headquarters of Silver, if you know. It's the purest silver company on the planet. So they're based in Vancouver, and then right now I'm in the U.S. I'm checking out a few cannabis companies, their facilities, everything that has to do with that. So
yeah. Okay. Well, so we are live. We got a couple people tuning in with us. So welcome to another episode of RTD Live Talk, and I'm excited to have Mr. Lior Gantz. He joined me a couple months back on an RTD interview episode where we had a lot of great things to talk about. And since then, a lot has happened. And, being that we're coming towards the end of summer. So just for those that may not know, Lior Gantz, he's a co-founder of Wealth Research Group, as well as an investor, a commentator. He's everywhere. He's a world traveler, so he's well connected and know a lot of things. And so, Lior Gantz, welcome back to Rethinking a Dollar, but this time we're live. So trying to get people to connect with us and call in and chime in and ask you some questions directly. So welcome back.
Hey, I'm happy to be here, and let's get this ball rolling.
Sounds good. So I want to start off. I have a list of questions, and as always, those are viewing. If you have a question, just chime in via chat or call in via Skype, either one. And so the question for you, first one is, it's 7 months almost, or it's 8 months into the year, coming towards the home stretch of this year. There's a lot of chit chatter on what could happen in September, October with the debt, the market, people betting, hedging against the market crashing. What are some things that concern you the most, or might have you uneasy at this point of the year? Anything at all?
Well, I'm more of a long-term investor, and I look at more at wider trends. Mm-hmm. So I don't go in and out of the market so much that I have to worry about every event. But with that said, I will say that the North Korean tension is definitely something that is of importance to investors, and there is a lot of movement of cash within pension funds and hedge funds right now to see everyone's betting on something else. In my opinion, if we have a conflict, it will be a very short-lived conflict. So. And I've said this live, or not live, but I was on another interview with Demeister Way a few days ago, and I said that any feud right now between America and another country will most likely end either in a cyber attack or in a very, very short period of time. This is not Afghanistan or Iraq anymore. People do not send troops. The only reason to send troops, obviously, is to secure oil fields, etc. So if you want to attack a foreign country, you don't want to stay there. That's been proven as the worst possible scenario, right?
Right.
And so, definitely that's something that's on my radar. I would say that the fact that Congress only has 12 days in September to decide a lot of issues plays into effect. But most of the time, my strategy with Wealth Research Group is more of a building a financial fortress, and therefore it's you just build. It's a plan.
Right. Now, one of the things that I tend to focus on a lot these days is something that seems to be, for some reason, keep coming back to my attention. Is the whole idea of the retirement, the pension aspect with the baby boomers. There's, I was doing some numbers last night. There's about 126 million Americans that are currently working full time, 35 plus hours a week, and then there's 51 million current retirees. And so this is the age where a lot of, you know, people are reaching that 65-year age where they're looking to retire. And there's so much tension going on in the pensions. Like I found a link online that just shows all of the actual letters that pension funds have had to send out, part of the new law that came about after the whole recession. So there's thousands of letters going out every day to people who are expecting to get some money down the line, if not soon. And it may not be there. So that's of concern to me, because my parents are in that category. So it's something that's near and dear to my heart. So share with me your thoughts on this whole pension situation. You know, will it be something that will be kind of immediate, or will it just be something that continues over years to get worse and worse? Or could there be something that cut it off altogether? What are your thoughts?
Well, let me split the answer to two, okay?
Okay.
First of all, let's talk about the realistic situation, what's going on. So the worst thing for pension funds is zero interest rates.
Right.
Because most of them do not invest in securities and stocks. Most of them, they invest in bonds. So what's going on right now is not good for them. And therefore, what a lot of them do, and this is even riskier than a stock, they loan the money. So
right.
they're trying to loan the money to corporations and earn an interest on that. That is risky, because that you now marry yourself to a publicly traded company. So you marry yourself to the market, and obviously that has implications. So pension funds are in huge trouble. Obviously, it varies from state to state and from fund to fund, because there's fund managers that have done well, others have not. But it's the same situation with insurance companies. So just mind that both of these entities, pension funds and insurance companies, are suffering from the worst type of environment right now with zero interest rates. That's part of the reason why the Fed has to raise rates, because it's putting a lot of pressure on these funds. And obviously, they have been lobbying Congress, and they've been imploring the Fed and other central banks around the world to increase rates. On the flip side, you don't want to increase rates too much, because we all know that if you increase rates too much, with the situation that's going on, the market will correct 40-50%, and this will obviously hurt people anyway. So it's a lose-lose situation, and they're trying to delicately and beautifully react to that, but I don't think it's that solvable.
Right.
And therefore, you know, my parents, my father and my mother, they were independents. So, you know, self-employed. So basically, pension funds were never discussed in my family. So I didn't even know they existed. At 16, I started managing my own funds. I got my parents to sign off on a waiver, and I managed my own stocks account. And I worked since the age of 13. So I've been working 20 years straight. I'm 33 now. So to me, I create my own pension fund, and I do not plan to retire at 65. I plan to create a financial fortress, which I've done, and build a small fortune and increase it with passive residual income. So rental real estate, and then long-term investments that cash flow, like dividend companies that we cover on Wealth Research. On the homepage, on the top menu, if you click Wealth Stocks, that's the top left menu. You'll see companies that you can build your wealth with. Those are companies that 30 years from now you will be able to bank on their dividends and on them being around, because you know, people have invested in companies that have defaulted, that have gone into not paying dividends, into having shrinking profits, and the companies that we cover are companies that are far and above the most the safest companies you can find, obviously, in the world. So that's important. So, but you know, for the average guy on a regular income, if he siphons that income into the stock market, he'll get rich or richer, but he'll only be able to retire at 60 or or older. It's not what you want, especially with life expectancy. I mean, I have a 1-year-old daughter. Her life expectancy is 114 years. So retiring 65 is not, that's not the way that they're going to live, these people. They're going to have different scenarios. So in my opinion, forget the government, forget everything that has to do with the government, build your own plan in life, and focus on, if you're an employee, focus on increasing your value within your work frame, so you can have higher income brackets and build those retirement, build that residual income via dividend payments, via private lending facilities that you can do. And we talk about that online Wealth Research, about how you can lend money for 6, 7, 8%, and make it safe. So you can borrow, you can lend, like, I don't know, just to give a number, $30,000, but you can give it or loan it to about 100 different people. Yeah. So you're making small loans. There's less, but then the caveat, what goes into this theme is the same as what we're talking about here, rethinking the dollar, right? The fact that the dollar could be irrelevant and lose that premium that is attached to it as the world's reserve currency, because that dollar is same as Bitcoin. It has value because it's being used. Right. So every time you liquidate a stock, every time a transaction is made globally, you need to use dollars. So they're in demand. That's why they have a premium attached to them. But honestly, this is the most mismanaged, used currency in the world.
Right. I mean, let me interrupt there for a second. Now, you mentioned dollar, rethinking a dollar. And so the idea that everything is denominated in Federal Reserve notes. And so the information you're sharing, definitely for a younger person who is more of a go-getter, who listens to videos like this, they'll be the ones that, might take action. But you got, a good portion of the planet now is of that retirement age that I can't say it's too late, but the likelihood of, my mom, she's interested in hearing what I'm having to say about blockchain technology, but yet she's not a go-getter like that. She's ready to dial back a little bit, because she preaches, I worked all my life, I'm tired now. She's still young. So that's the mentality of majority, in my opinion, of the current generation. So sure. My question to you would be, for those that are currently, well in age, how can they do something? How can they, if they are interested, take action for themselves now, being that, most of them are not going looking for this type of information anyway, because they are already ready to be comfortable. What are your thoughts on that?
Well, it's a tough answer, because my answer would be, there is no difference between somebody who's listening to this and he's 20 and somebody who's listening to this and he's 60. I won't give a better advice or a better suggestion to somebody who's 60 than what I give to somebody who's 20. The laws of building wealth are the same. People who are 60 should not take more risks. That's not what people should do. And a lot of retirees, they say, okay, let me play the lottery. Let me find a risky company and dabble in it for a month or two or whatever. This is not how you build wealth. And so there's not a really great answer. If you're in financial trouble because you've done 6 decades in this planet of mismanaging your finances, it's a problem. And what all that you can do is, starting from where you are, because that's all you have in life, right? Where you are. The world is not fair, and it's not just. Some people, they're born and their father is a Fortune 500 CEO. Other people are born in third world countries. So let's not talk about equality and such. It's people who are 50 or 60 and have no savings are in trouble. And what they should do and what they should not do is retire. It's a tough answer, but it's the truth. If you leave the market, you leave the beat of the market. You forget what it's like to be in the workforce, and it's gonna take a while. It's like people who get out of prison. It's a shock, because you need to get used to the real world. So definitely do not give up your active income. The best thing that you can do is keep your active income and find ways to maximize your discretionary income. Downsize. Use ways to save up. And with regards to the dollar and the risk of the dollar, I do 3 things myself, and that's what I can suggest to other people. First of all, I have 12 months worth of income for my lifestyle, for my burn rate, outside of the banking system, stashed. 12 months worth of cash. I have 3 years worth. I'm sorry, 3 years worth of gold and silver allocations, physical, in 4 different countries. So basically in vaults, in the United States, Canada, Hong Kong, and in Switzerland. And it's basically gold and silver allocated. And if push comes to shove, if something very bad happens, I have that. I also have obviously some that are not involved, some that are more accessible to me. That's my. I also have what's called a whole life insurance, which is a phenomenal life insurance product with per life. United States is only if you citizens are but it's by far it's amazing. It's not even an insurance. It's an investment plan. 114 years, and anyone just I have no dog in that fight. It's just something that I do and I recommend.
Right. I agree. And what the third one? Your third point. No, so the third one was the whole life you mentioned. Hello.
Sure. And then the fourth thing, and this is the fourth thing, and this is something I've been doing for years, and lucky to participate in cryptocurrencies as early as 2013. I've been investing in cryptocurrencies. So I ran a boutique fund 12 until 2015, and one of the first thing we did was invest in Bitcoin real early, and so that's why the fund did very well, and I was able to liquidate that fund and found Wealth Research Group. The idea that I want to reach a larger audience. The boutique fund was 20 high net worth individuals, and with Wealth Research Group, obviously I can reach much more people with no threshold. It's a free newsletter, and that's what gives me pride and satisfaction these days.
All right. And so I want to just, add my little 2 cents to the idea of you sharing what you mentioned about for your 4 strategies. And so just what dawned on me recently, and what I, tell, my generation that I'm in contact with is, one, coming to the conclusion that you were lied to, that the whole idea that, you can work for 40 years and we'll take care of you and that's all you got to worry about. Give us your best years and we'll give you, income for the rest of your life was a lie. So once you can admit that to yourself, bite the bullet and realize it's going to hurt because you're not going to be able to get the promises, that were given to you for lifetime income. And then from that point on, take what you have and your current disposable income and then become your own financial guru, where you be willing to take not necessarily take risk, but be willing to share, be willing to take more of the risk for whether or not your current, capital is able to grow or if you lose it, but yet to be by your hands, as opposed to turn over to financial institutions and saying, hey, take care of my money for me. I don't want to think about it. Just make it grow for me. So self-education is one of the 2 or 3 things I tell people. But yeah, it's, your disposable income now is what's going to make you and get you through, especially if the Federal Reserve note returns to 0, which I believe it's going to, because that's just the way all fiat currencies do. So I definitely wanted to, add that little piece here. What you think about that?
Now, Mike, 2 things. First of all, regarding the dollar, yes, it will be obsolete one day. That day is not that soon. Right. It's important to understand that the dollar is 71% of the world's currency in circulation. Most of it is outside the U.S., so it's not a U.S. problem. It's a global problem, and therefore, without a solution to it, even if it has another 2008 moment, they will not replace it that easily. Remember, most of the world is one paycheck away from being broke. And therefore, like in 2008, like when the GM workers did not receive their salary and the federal government said, we'll come in, we'll do whatever it takes. These people will be satisfied with that. Employees will be satisfied with what the government says. They're not looking for a long-term fix. Most people, sophisticated people, like people listening to this show, they're interested in changing the system. But we do not have that luxury, right? We cannot change the Federal Reserve System. It was construed on a Christmas break in 2013. These people are corrupt. This is felony. So we definitely not you and I will change it. We need to adapt to it and live with it. Now, with regards to people who are 50 or 60 or whatever, the 4 things that I mentioned are conventional. And people should definitely consider them. And with regards to cryptocurrencies, we created a special report for people who are just beginning at wealthresearchgroup.com/crypto2017. I can have that link in there, or if people can see the group chat, I can type that in there. But it's an exclusive report about our favorite cryptocurrencies. One that we profiled for our free members of the newsletter has gained 1,400% since February. So there are opportunities out there. With regards to gold and silver, do not look at the price. Look at more of its utility. It's giving you a lot of assurance. Now, the best way and the quickest way to change your financial situation and be able to comfortably retire is leave your country. If you're living in a modern country, there are many opportunities outside your modern country in a semi-modern country, I'll call it.
So more second world, third world type status, or?
Well, third world is quite a long ways away, but you can own, and I'm talking out of experience. There are two Americans that leave the United States every day. Two retirees. That's the state. I'm sorry. Yeah, a day. Yeah. Anyway, some options. Some people they buy a cheap business to start off with, like a $5,000-$6,000 business to start off with, and they live a life of paradise. One couple that I'm in communication with has a beach bar in Guatemala. It costed $4,000 to open that thing. They live on the beach in hammocks. They invite all their friends. Tourists come. They have a great life. They're retired. And the beauty about this is they have enough money to sustain their entire life. The burn rate there is much lower, and you live in heaven. This is a beachfront. There are a lot of people who are moving to Central Asia. Lots of opportunities there. Some people live in Africa, but I'm talking they live like kings.
Right.
And so if you're ready to do some research and find great places to live and even have a second passport issued, South America is an amazing place to live. You cut your burn rate by 70%. So if you live in America for like $4,000 a month, cut that by 70%. So you're talking from 4,000, you go down to 1,200. You just extended your retirement 3 times.
Yeah.
There are a lot of opportunities, Mike, and you just have to think outside the box. And as I said, you have to make tough choices if you really want this. It won't be simple for people who are 60 and they have 25 years ahead of them to just bank on the government. I think it's a ludicrous idea, frankly.
Right, I do agree. Now, so I got a couple more questions, but yet, for those that are viewing, if you have a question, you feel like calling and being brave and just talking to us via Skype, asking Lior Gantz directly, that would be great. And so if you see above my shoulder, it's Skype at RTD Live is the address. But yeah, I want to ask you a question from Release and Capture, who asked a question in the little chat there. And it says, he's talking about the gold and silver ratio. And saying that the gold and silver ratio crossed into the 70s in September 2014. We are still deep into the 70s. He said, what's going on with silver sentiment, and precious metal sentiment in general? Well, and so what are your thoughts with that?
That's the most well-timed question ever, because I actually wrote about this subject today.
Okay.
So basically, the gold and silver ratio has been fluctuating between 40-1 to 80-1 since about 1971, since they got off the gold standard. Every time in this millennia, so from the year 2000, every time that it reached 80-1, silver stood there and did not get cheaper relative to gold. That 80-1 is where institutions come in, people come in, people who are buying gold or silver decide to go with silver, and silver outperforms. So we are at that level right now for the lady that has asked. It's hovering at that 80-1 level, and therefore in the next few months you're going to see silver much more performing much better than gold. With that said, what's even more impressive is that when silver outperforms gold, mining shares outperform both metals. So if you're in the mining shares, if you know what you're doing. For example, I just came back, and we were supposed to do this interview yesterday, but I I had a flight delayed. I came back from the headquarters of First Majestic Silver. Now, First Majestic Silver is the world's purest silver miner. It has 6 mines in Mexico. It's going to have a 7th. It's founded and run by Keith Neumeyer, who's a rock star basically in the mining world. And that company is cheap, very cheap, and it's trading on the New York Stock Exchange. So you got institutions, you got ETFs, you got even the central bank of Switzerland investing in that company whenever it's cheap. That is probably one of the best ways to play the silver momentum. And before the show, I was on the phone with Keith, and we created a report about this at wealthresearchgroup.com/silver. So you can get that. You can get all the information about the company. Disclosure: I own shares, obviously, but Mike, with regards to silver to gold, silver mostly, and for the young lady that asked, silver mostly trades as an industrial commodity these days. Gold has that premium of a precious metal, a monetary unit. Mm-hmm. And therefore, what you see is silver trading at or above its production level, and you see gold trading at a premium to that. If silver starts being a monetary unit again, mostly by Asians who can't buy ounces of gold and deciding to just accumulate or hoard silver, you'll see silver doubling, and that will make a difference to industrial uses, because it goes in pittance into all of these different products. So even if industrial companies have to pay $30 for silver, they won't look for alternatives. It can easily trade for 30. Now, think of a mining company that produces at a cost of, let's say, $16 per ounce, and silver is trading for 20. So their margin is 25%. If silver doubles and goes to 32, if silver goes up from 20 to 32, which is a 60% rise, their margins go from $4 to $16, because now they're still producing for 16 and it's trading for 32. That's a 400% increase in your margins, because now you're not making $4, you're making 16, you're making 4 times. So these companies, they will create monster gains, and you saw a little whiff of it in 2016. You saw from January to August, these companies go 6 and 7 and 8 times up in 8 months. You don't see that in any other sector except the mining sector, because it's so cyclical and based on that momentum that precious metals sometimes have. It's a fear trade, and that's important to understand. So these are not long-term investments. Very different from building long-term wealth. These are ways that you can create massive wealth in a short amount of time, a season, if you want to call it that, and then liquidate and look for other opportunities. Yeah. So
now let me ask you a question. So now, and I noticed today, I'm not sure why or what happened. I'm not sure if it's because of all the chit chatter with, Donald Trump's, President Trump's comment on Korea or not. But I noticed there was a little price spike in gold and silver today, which looked like, it was going to make a move. I haven't looked at it lately, but, is there such a thing that if it does, I'm hearing people say that if it hits $20, it's a wrap. It's going to shoot through the moon type of thing. I'm assuming that's due to fundamentals or something like that, the technical side of things. But, do you think they will do their very best to make sure that there's going to be an increase and a drop, increase and a drop? And at some point, when will this madness, you don't never know when it will stop, but yet, will it get better for those that have been waiting for the nominal price to increase at least, even though that's, as you mentioned, that's not something to focus on. But a lot of people, are concerned with that.
Well, if you're investing in mining shares and not just buying the physical metal, the nominal price is everything to you. Mm-hmm. So that's why it's important. If you buy physical silver or physical gold, your best motivation is for the price to drop, because you get the same ounce for less.
Right.
But if you invest in mining shares, you want those prices, the nominal prices, to shoot up. One thing that people need to take notice of is that gold and silver are both very unique commodities. They're unique commodities because, unlike other commodities, they actually have fans. Like, do you know zinc fans?
No, not at all.
Copper fans?
Not
but
at all.
there are gold bugs.
Yeah.
And so you got to understand that in this business, you're either a contrarian or you're going to lose. And so you can't be a permanent bull on cyclical commodities like gold and silver. In fact, most of the year, at Wealth Research Group, when we issue alerts, we tell people to buy the quality companies, but then also short the actual commodity. So while you're building a position in the best companies, you're actually making money on the fact that the sector itself is tanking. So you got to be more sophisticated than just be a permanent bull, especially in a commodity that most of the time is trending down. With regards to the nominal price of gold and silver, sometimes political events move it. It's a short-term move, but what really moves gold and silver is the real interest rates. So that those would be the nominal interest rates minus inflation. Inflation right now is very tamed. It's not high. And therefore, the price, you haven't seen it explode, even though the Fed has issued trillions of new currency units. It doesn't matter. The amount of currency units that the Fed has created is being offset by the number of currency units that the world is, that the private sector is closing down. So people are closing down their debts on the private sector, and that creates a situation where the global amount of dollars, though it's being increased by government, is being decreased by private sector, and overall, it doesn't create inflation at this point. In my opinion, it will create inflation in the future. And inflation, if you go back in history, Mike, you'll see that inflation goes from 1% to 20% in 1 year. So inflation is a paradigm. When people are not confident in their fiat currencies, they start spending it, and therefore it's a snowball effect.
Right.
So with our thesis right now, what is very strong is tech companies, and therefore real assets are getting cheaper and cheaper and more hated and more disregarded. When that trend finally shifts, you're going to see all of that money that has been devoted to high tech and to biotech and to the FANG companies moved into real assets, commodities. It's going to be one of the most prolific moves in stock market history, because right now the commodities, the real assets to technology, is at the highest ratio in history. So just a few percentiles moves in the mining direction. Think of it this way: the 50 largest mining companies, those that supply those 5 technology companies with all the materials they need, Apple and Microsoft, everything, that the 50 largest, their market cap combined is equal to the market cap of those 5, not even equal to the market cap of those 5 companies, though their revenues are larger.
Right.
So it's a very hated sector right now. That's why it's very important to understand that if you are playing this, it's a 2 to 5 year game. You position now when it's early, and you create a watch list of the quality companies. In fact, go to wealthresearchgroup.com/watch list, and you'll see the companies that we track ourselves. And even the prices that we look to increase our positions at. Getting back to the subject, in my opinion, gold will trade above $2,000 per ounce. It will not happen this year. It will happen through this cycle. In my opinion, silver will trade above $40 per ounce, and that ratio will trade about 40-30 to 1. It will not get back to that 16 to 1 unless a global catastrophe does happen, and then silver is much more attainable to the common man. So I believe he will accumulate silver much more than he'll accumulate gold. The only problem is silver is being consumed on the industrial level, and gold is not. So all the gold that's ever been mined, somebody has it.
Right.
It's somewhere. Not so with silver. It's important to understand that.
That's very true. All right. So another question is, I wanted to get to another question someone put up here, and it's about the cryptocurrencies. And so there's actually 2 questions, of which I kind of hinted on it before we started. And the first one is, anybody, let me see, where is it at? I forgot who. Let me see. He says, finance and economics want to know, are there any promising ICOs you recommend?
None.
None. Okay, so that answers that question there. The next one.
Let me devote some time to discuss it. The quality ICOs, they get subscribed or they get funded in seconds. So there's nothing that I can say right now that is good to somebody who's watching this, 3 or 4 days from now. And therefore, it's important. If you want to play, if you want to invest, I shouldn't say play at all, because some of them are real investment. Most of them total scams.
Yeah.
And obviously the SEC is pounding on these ICOs right now. But companies that raise money through ICOs, you got to be an expert to be in that field. And I have to say that it's a very risky field. Now, on contrary, some blockchain companies are going to be IPO'd. So they're going to be common stocks that that are regulated, monitored. They're within government laws, with incredible management teams. In fact, I've met with a few of them, just in the last week. Companies that are going to be mining cryptocurrencies, securing the anti-terrorism, all that kind of stuff. For cryptocurrencies, when that field opens up, the publicly traded blockchain companies, that is somewhere that you can really be a pioneer and invest in, and these companies will do absolutely well.
Right. Is the future in blockchain technology, as far as the idea, of going more towards a cashless society to where everything is digitized, and will blockchain, in your opinion, be a part of this? This new technology be a part of, how the future unfolds? If we have some type of event where we're forced to, or is this the trend that was set up from day one?
Well, any change in society that's ever been made has been done by the private sector, and then government changes. So, just think of politicians, Mike. Politicians are not aliens. They grow up in our society. Okay, they grow up with us. They can be your neighbor. For all intents and purposes. So they grow up, they see what's forming, but politicians, they're ruled, or they're governed by this madness to bend reality instead of adapt to reality. You and I, we adapt to realities. They try to bend and force their realities. That's the only problem with politicians, but that's the fundamental problem. Overall, cryptocurrencies, the blockchains, there are thousands and thousands of blockchains right now. This is the future. And the fact that we talk about the fact that it's becoming more known, that's what's going to make it the future. The fact that people like it. And so therefore it's going to go through many, cycles. Just think of your first modem that you had to plug. It sang that song for like 30 seconds. That music.
Yeah.
And, today, if you show it to a kid, he doesn't even know what that is. But it was 20 years ago, right? So these technologies, they will evolve. People will come in. Brilliant people will come in. Fortunately, people much smarter than you and I, and they will bring a lot of utility to us, a lot of use, and they will get paid for doing so handsomely. We can invest and partner with them, which is what's beautiful about the stock market. That you can partner with people that will never give you the time of day if they were a private company, right?
Right.
And so, yeah, look, ICOs at this point, no, unless you're a real expert, unless this is your career, this is what you do. But there are funds forming up right now. You can find them online. There's about 40 funds just this month that are raising money to invest in either ICOs or cryptocurrencies. The more regulated and the more we progress with cryptocurrencies, the more that these legitimate avenues will open up for the public.
Right. Okay. Now another question is in regards to kind of, I hinted at it before we went online live or whatever, about the idea of, from a recent interview from Sean over at SGT Report, who does great work. He had Lynette Zhang, if I'm saying that correctly, a young lady who works for a gold medal, precious metal company.
Okay, I have a joint interview with her later this month where we're both guests. Okay, I know.
Okay, so good. So I think it was last night, I believe. It was he came out with a video of which, if you don't know much about it, I recommend you listen to it. It's quite interesting. Her stance was that I guess that and the AC coin being under IMF control. And as I mentioned, it's kind of linked in with China. And so they're talking about digitizing physical property, and they're experimenting with it with, tea in China, where they've, put a bunch of tea in a building and, made tokens for it, and they're selling it as an ICO. So they're test running that to see what they can do with everything globally down the line. So what are your thoughts on the fact that the blockchain could have originally been written by this Satoshi Nakamoto character or a group or team by somebody for this exact purpose, if this is something that turns out to be true?
Wow, that is a wild that is a wild conspiracy. But let's just think about what the blockchain is, and why not? I mean, governments, they're not stupid. They're like us. They're people. They see that this is a brilliant advancement, and they're trying to incorporate it in their own uses. So yes, of course, we'll see government coming into the cryptocurrency space. They'll come into the blockchain era, and just like the government has a website, right? They're on the internet, so they're going to be on the blockchain. It's no different. Yeah. What is important, Mike, to understand is that this will also help transparency. So, for instance, gold right now, if you take a look at the COMEX is about leverage 250 to 1. So if all the people who are trading future contracts will demand their gold, only one in every 250 will probably get their ounces.
Right.
If the mining company that extracts it out of the ground and sells it, puts that selling contract on a blockchain, so there where every ounce is of gold, silver, etc. This will put away all of these JP Morgan, Barclays, HSBC, all these money laundering legal activities.
Right.
They will be put to rest in the future. A lot more power to the average person. Just think about Africa, or about countries where tyrants seize your property or seize your bank account. Now your bank account is going to be on the blockchain. It's going to be your property. It cannot be stolen. That field that your father gave you, that has been passed through the centuries in your family, that it will be yours, bar none. Property rights will go up to a whole new level. Your podcast, people cannot repost it without paying you something for it, because it's on the blockchain and it's yours. So books, songs, everything. The blockchain is incredible. I think it's going to have scaling issues. It's going to have interoperability issues, but like all the blockchains need to start communicating with each other at some point to make it a more global system, because obviously this is where we're going. This is a global world.
Yeah.
And it's a small world right now. If I call Coinbase right now, I want to buy 100,000 worth of Bitcoin, they'll tell me to call 6 days now every time I make a $15,000 purchase. The big players cannot go into the cryptocurrencies right now. That's why we're looking for a lot of solutions. If you go to these conferences of Bitcoin, you'll see many brilliant people, and you'll hear about the problems, but you'll hear a lot about solutions. So I'm excited.
Right. And so I I'm very, very leery of it, just because it seems to be arriving on the scene as a great technology right at the right time, as everything that has been set up is coming to an end. So all of a sudden we got a savior in the form of blockchain that's supposed to be beneficial for us, but yet it also can be used for evil. And so only time will tell, because if it gets in the wrong hands and it's promoted and no one fights against it, it can easily come back to bite us in the butt down the line, I believe.
Mike, anything in the wrong hands can come back to bite you.
Right.
Money can be used to hire a contract killer and have you whacked. So here's my position on this. It is true that we don't know who's buying cryptocurrencies, and maybe the federal government has, or the Federal Reserve has a fund that's secretly buying it. It's going to dump it. It's going to create volatility. So we lose confidence in it, etc. Lots of things can happen. The bottom line is, Bitcoin was not created to be a cryptocurrency. It was created, if you read the mandate, it was created to be a peer-to-peer payment system, a cash system, just to avoid double spending. That was the original intent. Now, what it turned out to be is a cryptographic currency. So a currency that has a cryptographic layer on top of it, and therefore it has more value than a fiat currency. With cryptocurrencies is that people say they're limited in amount, right? There are only 21 million, but there are thousands of coins.
Right.
So what's happening is people will migrate to that coin that they want to use, and all the other ones will be worthless. So it's important to understand that, when you buy a government issued or when you have a government issued fiat currency, at least there's that assurance that most likely that government is not going bankrupt tomorrow, and you don't have that assurance with any cryptocurrency,
right,
except for the most established ones.
Now the legal tender aspect is what makes fiat currencies somewhat
True.
Promising the full faith and credit of the Federal Reserve government. True. And so there's a lot of countries, just to chime in, I heard, I'm not sure, that has kind of legalized Bitcoin as a form of not necessarily legal tender type status, but they've made it something that they would allow. So with that being the case, could the Bitcoin in and of itself become a store of value down the line that people turn to, being that it's that digitized on the blockchain, no one knows, all that transparency stuff? Do you see that happening or no?
Who knows? I bought Bitcoin at $7 and sold it 119.
Yeah.
So who knows, right?
That was the right time. So, all right. So let's move along a little bit. It'd be great. What I'm always shooting for is to have someone call in. We always have one or two brave souls willing to call in and ask a question. So if you are tuning in, feel free to call in via Skype. My Skype's on. I would love to hear your voice if you're interested in doing such, being a brave soul. But we're going to keep moving forward. Now, and also we talked about prior to going live about just debt. And how there's, let me call off some figures. There's $14 trillion in mortgage debt. There's 1.5 trillion in credit card, and there's one something auto loans, 1 trillion something auto loans. So it's going on and on and on because we're easy money policy. Credit is for free. As long as you're alive, you get approved. How, I can't say how long can this last because it's been going on longer than I've ever imagined. But can't one of those some defaults here and there be the pin that pricks this bubble of just unsustainable debt, which can lead to all things unraveling and really speed up, what some people say the reset or,
sure,
whatever it's called. What are your thoughts on all this debt? Is it going to keep going higher or what?
Well, the debt hit an all-time high just a few days ago. So it's something new that's going on. It's new that it reached an all-time high. This is household debt. So things would be home equity revolving, mortgages, credit cards, auto loans, and student loans. Now, what the government will not back is credit card loans. There is no way that the government will save the consumer. They will come in and say, hey, you haven't paid your credit card, we're going to bail you out. They might bail out mortgages because those tie into banks. They might bail out student loans because those tie into, universities. Those are somewhat more connected to the government. There's no way they're going to cover auto loans, which are very high, and in default, the default rate is rising. There's no way that they'll cover credit card debts. That's mostly where this will come from. But if you want to talk about the motherlode of all problems, it will be when the Chinese and the Russians feel safe enough that they have accumulated enough gold to cover their currencies so they don't have to show up to all the auctions and buy treasuries. And therefore, the federal government would not be able to issue new treasuries at the amount that they're doing. Then they'll have to cut back. What do you cut back? Social Security? Medicare? Medicaid? I don't think so. Right. What do you cut back? Military? I don't think so. So they're going to go after things that are important to Americans, but not those holy cows. They're going to go after education. And they're going to go after food stamps, which 1 in every 40 million Americans receive. America has lived on a borrowed credit for a long, long time, and that's the major shift. It happened to the UK when their currency was the reserve currency, the last before the dollar, and it will happen in the US. The problem is it's much larger than what ever happened in the UK. And therefore, look, go back to the famous chart from Professor Siegel in his brilliant book about economics, and you'll see that from 1812, $1 is about 4 cents today. $1 placed in the hands of the greatest financial, the stock market, is $786,000. When you put your money in the hands of brilliant people over the long term, you will not get this wrong. 2 world wars, famine, flus, oil shocks. What didn't we experience in the 20th century? And yet, if you put $1 in the United States stock market, which is the best stock market in the world, you are not putting your money at risk with any governmental type entity. You're putting it in brilliant people's hands, like Steve Jobs, people that are changed the world. That money will compound in the best rate. The only thing that can compound better is if you own a business yourself. That's in history, owning your own business has been the most productive thing that you can do to earn money.
All right, now let me ask you a question. Now, being that all this debt, you mentioned it won't be backed up by the government because it's just, people's personal decisions to go out and buy a car they couldn't afford or vice versa. Now, when it comes to all the fact that a lot of that debt has been packaged up as securities and as assets that have been sold out to people, so people are investing in a lot of these mortgage-backed securities, all that stuff like that. Now, what happens in a derivative front? If all this stuff goes bad and someone on the other side of that bet got to cover some losses. So, can't that be like the canary in the coal mine that causes some problems as far as defaults and,
who knows, Mike? The derivative market is unregulated and 6 times as large as the world's GDP. Yeah. It's who knows? Who knows? Yeah. Derivatives are a mystery. And like Buffett said, they're a weapon of mass destruction. So I don't even want to get close to that. I'll never buy a mortgage-backed security.
Right.
It's not my cup of tea. If I loan somebody money, it will be through peer-to-peer lending, and in small increments. I get my 6 and 7% back, and with a default rate that's almost negligible. I don't dabble in that. And I don't suggest anyone does. The worst thing that can happen is when somebody convincing calls you from your bank or your financial advisor and gives you these exotic products to try. And you really should. You really should stick to what you know. And in times of doubt, just be more on the cash side. What's going to happen? You're going to get a 2% erosion from inflation or 3% erosion from inflation and losing 25-30% of your money.
Yeah, good point there. Now let's talk about, as we draw towards the end of our conversation, where we're currently at now with the idea we're heading to the fall. And usually September, October, there's always some market fluctuations and just, a lot of questionable activity. You mentioned earlier, as we was talking about Ray Dalio, a famous investor who, is doing some activity in short and telling people buy gold right now because of what's coming, the debt ceiling, all that stuff like that. What's your thoughts on that? How will all this unfold? Will it be just another, increase and nothing else to worry about, or could this be something worth talking about more?
At Wealth Research Group in April, we laid out a script called the blow off top. And what I said was that in 1 to 3 quarters from April, there will be one last massive correction in the markets, 10 to 15%. Once that's done, it's going to shoot up. The Dow is going to hit something like 36,000 points. So that's almost a 50% increase from where it's at right now. And all of these markets will simply go up to bubble levels because of human nature. And after that, we see a real massive crash.
Massive crash. What is a real massive crash? What is a massive crash? Like 2008, 2009 type crash, or
a 50% decline in the broad markets. And you know what? It's natural. There have been a few of them. Just take a look at 2000, 1987, etc. The market will keep going up, but it will plunge and then just continue to new all-time highs, as it should. Companies get bigger and bigger, markets get bigger and bigger, companies get more efficient, and that's why the stock market is in an eternal bull market. But it does have wild corrections and wild crashes in our lifetimes. So that's one thing we see. September is notoriously, just simply the month of September is notoriously and historically the worst month to be in the market. Volatility is the worst, and it's just because people come back from July and August, where a lot of people don't work, or politicians take holidays, and a lot of decisions needs to be made. So volatility increases, people shake up their positions. It's the beginning of of another time of the year. The Indians and Chinese increase their buying of precious metals, so that's historically the best season to for appreciation. For Trump, it's going to be a massive test. It's going to approach 1 year to his to his election, and he's going to need to show that he's achieved something. Healthcare has failed. Tax reform is not moving forward. The wall is not moving forward. What have you brought to the table? And so he's going to be under a lot of pressure to show that he's worth something. Interesting times, as you said. Ray Dalio's net worth is over $20 billion, and he's the world's largest hedge fund manager. Is investing in gold. Has stated that if you don't own gold, you don't know history. And I couldn't agree more. With regards to the mining shares, as I said, if silver starts rallying all higher as it did today, you are going to see mining shares create a 2016 type environment, which will be incredible. At Wealth Research, we will cover specific companies that we think are outstanding and cheap. Mm-hmm. And if you take a look at the GLD outstanding shares, so the GLD basically tracks gold. So the more GLD outstanding shares, the more gold is loved. As I told you, there are a lot of permeables. GLD is collapsing. So even the permeables, even the gold bugs are giving up, throwing in the towel right now. It's a great time to be a contrarian. In my opinion, zinc and copper are very, very interesting. Zinc, because there hasn't been any discovery in the last 20 years. Not one. Can you imagine another industry where the metal has not been found 20 years? And copper, nobody cares about copper, right? But it's at a 2-year high, and the demand just keeps going up from Asia. I think there are exciting opportunities, and I'll just tell everyone, if you want more information on this, like if you want the juice, on the website, on the top menu of the homepage, it says special reports. That's where you can find the widest array of special reports downloads that we created over the years. And our goal is to share what we learn with the public. Rising tide lifts all boats, which is exactly what you're doing, Mike. And that's what we should all be doing, making sure that people stay away from mainstream ideas and conventional wisdom that doesn't work.
Yeah, conventional wisdom is a thing of the past, because I was just recently, just as a little side note on the whole banking industry. I recently, went into a local bank of mine, and the young lady tried to convince me on how, how to manage some money or whatever. And I looked at the rates on the wall, and it said 1.25% for a 90-day CD. And she was like, that's industry standard. I'm like, but that's nothing. That's well below inflation. So you're taking my money, so I'm not giving it to you. But she was like, she was caught off guard by those statements, but had to be upfront with her. But I'm not. I don't do that. So I recommended a video of mine to her to kind of give her an idea of what I was talking about. So I don't know if she watched it or not, but it is what it is. But let's approach the very last segment. And so this is the last segment where it's more so like I'll call out some words or something, a statement, and then you tell me what comes to mind.
Sure.
And so, we got a couple of viewers watching us. So as always, I'd love to have you call in at RTD Live on Skype if you're interested. I'd like to get at least one brave soul before we end this live broadcast. But can't be picky. I'm grateful for those who are watching us. But very first one is President Donald Trump signing Russian sanctions.
Look, I think President Trump as a whole is a very outside the box individual, whether or not you like him or not. I think he comes from this background where he is one of the best business people of our century. And, think about it. He went bankrupt. He is famously quoted he's famously quoted, well, not himself, but the business.
Yeah.
He's famously quoted for being, for going on a date with the lady, pointing at a homeless and telling that his date, that person is $1 billion richer than I am. So, that person is a person that thinks big. And I think he is prone to do mistakes because he doesn't come from the political background. So I don't think he gets the ramifications of many things, but I think he has the eye of the tiger. And therefore, I think increasing your safe havens allocation by getting a second passport, going into gold and silver, etc., everything we talked about is essential, because this is not a status quo guy. This is a guy who is not afraid to shake the boat. And so that's important. Regarding Russia, look, I think it's important to engage. And what he's trying to create is an America that is feared, rivals for superpower. Right. And so that's his game, and that's what he's going to continue doing. It's a risky game.
Right, he's playing the tough guy role of issuing some very harsh words, and other than just the fact it sounds good. Now it puts you in a position where, like years ago, Obama drew the red line when it came to Syria, but nothing followed. And so Trump out here talking big, you're gonna talk big, you're gonna have to back it up, or you will be tested, I believe. So, and being tested is going to lead to some type of unfruitful event of possible lives being lost, which is very tragic. But that's kind of the world we're living in. But to move along to the very next one.
With that said, just to clear something, Mike.
Yeah.
A president has so many things to consider that I do not envy any president of any country, especially the United States. We will never know what's going on in his head, and therefore I'd rather not judge him.
Right.
I'd rather just live my own life.
Right, I do agree. So a good way of putting it. So the very next word is Bitcoin Cash.
Look, I think Bitcoin's infrastructure, after the fork and before fork, it doesn't really matter. The Bitcoin infrastructure, the amount of people that are putting effort daily in increasing the Bitcoin industry is enormous. It's not going away. Any of the two will be obsolete anytime soon.
National debt of 20+ trillion.
Look, unless they mismanage the interest rates ups and downs, that national debt will probably be there 20 years down the road.
Wow. Really? You think it'll stand that long?
It will grow.
Yeah.
As the amount of people in the United States grows, we will have 400 million people and a $35 trillion debt. It's sustainable so long as we can, so long as the United States government will be able to pay its interest on the debt.
Yeah.
And still be able to meet its obligations, and if other countries will come into the auctions. If not, they will need to do a restructuring. That might lead to wars. That's the nightmare scenario, right? Where everything unravels, not in a beautiful way, but in a very violent way.
Right. Well, hopefully, we can get through this year without any type of major events happening, and the years ahead will be great. But yet, it just seems that the politicians and the monetary powers that be, are always trying to, gain more power at the expense of us normal people, such as myself and, possibly you. But, Lior, it's been great having you. You're normal, okay. But no, Lior, it's been great having you, man. We're going to wrap this up. And so anything you want to leave to those that are viewing us, any suggestions, tips, or recommendations? I know your site. I'll definitely link it below this video here. But any last thoughts you want to share with those that might have just tuned in?
Yeah, sure. In the bottom line, we all have to, we all have 24 hours per day, and we all pretty much sleep 7 or 8 hours. We have 16 hours to be awake and to advance our lives, not at the expense of others, but with the use of others. And wealth is truly, if you want to really look at that word, it is your ability to be resourceful and use your environment to the benefit of everyone. And that way you can progress in life. So, stop with any, stop the blame game. It is what it is. I mean, some people are born rich, some people are born poor. It doesn't matter. We are where we are, and it's important that people take that possession of their own minds and move forward in money, in their own physical body, with nutrition, with sleep, with exercise, with social life, etc. Building a good life, and the rest will come into play. And make sure that you understand, money is the most important thing to build a quality life. If anybody else tells you anything else, that's bullshit. Outside of oxygen, money is the most important thing. And with regards to your health, money gives you better access to food, to nutrition, to information, to everything. Build a financial fortress, and as I said, I share all my views, all our top information, our highest conviction reports, and specific stock suggestions at the Wealth Research Group newsletter. And if you want to take us for a test drive, then go to the website. You'll see the special reports tab. Download any of them, and get to know us.
All right. Well, Lior, thank you for sitting down with me. It's been great talking to you and getting to know you the last couple months, following your work as well as having the chance to talk to you. So I definitely learned a lot, and I appreciate you, sharing your knowledge with us. And before I let you go, I just want to ask one question from Jesse James that I forgot to. I just scrolled and saw it, but he wanted to know: do you think the correction? I'm assuming the correction in the precious metals, I'm not sure, is happening now.
I think he's talking about the correction in the S&P 500 after what happened today. But let me just address both.
Yeah, please do. I didn't have a chance to find more about that. Go ahead.
Well, I think the broad markets are due for a correction. I think they will correct. Like I said, in April, we said it will take a quarter to 3 quarters to see a 10% correction. I think it's going to transpire this year. With regards to precious metals, I think they had a correction, and they're more likely to end the year higher than they are right now than lower. Okay.
Now, the very last one from Release and Capture. The question is, do you have any opinions about the Gold Money platform long term?
Honestly, first of all, I love James Turk. He's a dear friend. One of the people behind Gold Money is also an Israeli like me. Look, I hoard precious metals. So the idea of owning precious metals and then swiping a card that draws from my precious metals is not what I want.
Right.
The way I structure my finances, 20% of my net worth is in cash, and the rest is either in cash flowing assets or in safe haven assets. So if the person who's asking this is thinking, hey, let me just convert all my fiat to precious metals and then start spending it, you're going to encounter a lot of fees, and investing everything all the fiat that you have in precious metals is long-term not a great idea. It really isn't. It's a great idea only in situations where the fear factor pertains and gold and silver rise. But ultimately, gold and silver retain value and not increase in value. It's an ounce. It is what it is, right? So with most of your cash, do not invest in precious metals. Invest in things that grow, that compound. As I said, rental real estate is one of the best ones. Dividend companies that are quality, like our wealth stocks on Wealth Research Group, is a great thing. Private lending, there's get into private businesses, own equity in private businesses. There's so many things that you can do better. With 10% of your portfolio, own precious metals, because that's insurance.
Right.
But if you own 100%, you'll see that it's a roller coaster ride.
Right. And so I recommend, and I tell those that are my close circle that, your paper is meant to spend, but you save metals. Just because paper loses value, metals retains it. So that's just a good way of looking at it. So Lior, thank you for joining us. It's been a pleasure having you sit down with us. We've been over an hour, so I appreciate that. Didn't get a phone call, but yet I'm not mad because we got a couple questions and I walk away a little bit not more knowledgeable because I learned something talking to you. So thank you.
Hey, Mike, thanks you anytime.
All right, my man. Look forward to following you more. Keep doing what you're doing. Have fun and be safe.
Thank you very much.
All right.
And thanks for everyone who tuned in.
Oh, yeah, definitely. Thanks, guys, for watching us. And leave your comments below if you have any more questions. Hopefully, Lior, if you get a chance to check the replay of this video when it's up, you can answer any questions in the comment section if you have time.
No problem at all.
All right. Thanks.
Thank you.